Welcome back, my friends. Today I would like to talk about Trader Joe and its token Joe again. If you watched my previous video, you know that I was trying to short it, and as I was telling you that this is possibly we broke this range resistance here, upper range resistance, and I told you that there's high possibility that we are going to see some kind of deviation here. And as you can see, for now it looks like we succeeded in that assumption, and we kind of do going according to the scenario that I mentioned before. And I told you to watch this level 2, this previous fake out, and as you can see, it turned out to be a successful resistance. As you can see, we got rejected once, twice, 3 times, and a little bit didn't get to it too. So basically these were the signs that we are rejecting and we are deviating here. And I told you to watch first this first trend line. When we are going to lose it, we are going to perceive it as resistance now, and we are going to head up to this the second trend line. And this is actually what happened actually. And if you followed my Twitter account, and I mentioned it earlier today, that I was entering short at 62.18, somewhere there, 62 cents 18. And today in the morning I got a notification that my price that I was expecting has been reached, and I took profit at 55.5, 55.7, 55.5. I don't remember precisely, somewhere here. So I took this profit, this 10%. It is a good trade for me. I took this profit. Why I didn't hold for a longer term? Because I was telling you in the previous video that I'm expecting the price to come at least to 50 cents, or maybe even 55, 53, somewhere there, because it is the rules of the market structuring. As you can see it, we need to see. I will enable my additional trading tools, indicators that I use here. We have this uncovered wick already, so we will need to be back to cover it. And I told you that if we deviate, we need to retest this range resistance again, so it would confirm that it is working as resistance from now on. So basically, if we come for this retest and get rejected from it, this is a great entry for a short again. It will be a great indicator that we finally proved that we are going down. And most importantly for me, we need to lose this Kijun resistance, Kijun support, so it would become resistance for us. Maybe we'll lose it somewhere here and go lower straight away, or we will lose it somewhere here, try to retest this resistance, this range resistance, and this Kijun resistance, this local trend counter trend line resistance, and then we will go lower. These are the levels where I am going to take another short if I get this chance. And this makes sense to me. Let's look at the weekly. On the weekly, it kind of looks that we still could have gone up to 67 cents, 70 cents, and I mentioned it in my comments and on my Twitter account. But on the monthly, it looked to me that it is it. We cannot go higher than this level. Not likely. And this monthly tells us, if we enable our EMA here, what we can see, how long we can do. It means it depends on how fast we are going to retest lower, but we are going to at least 50 cents or 46, 45, who knows. Further, I'm going to follow how this monthly is going to close. If we get back lower, sorry, I will switch to another chart, and without the drawings. And so if we go lower and within this month we start reversing strong and we start breaking to the upside, then it is going to be again bullish. But if we will close something with something like this, or another red candle with the long wick, then the next month we are going to retest it and go even lower again, and go who knows how much lower. This is going to be we will find out when the monthly is going to close. So, and let's back to our drawings here, and what we can see and tell here again. If we are not feeling this resistance of this line and or this Kijun, and we try to break to the upside, then we are having the expansion and we can go up to 70 cents, and maybe after that we are doing this is going to be our invalidation point. So be vigilant and only enter the shorts when you see the precise rejection and rejection candles. We had this candle, here is the one rejection candle here, and another one, vivid reversal candles. So definitely follow this. And also I wanted to talk to you about this jaw. Why? Because everybody gets bullish when something that nobody talked about in months, in a year, and something that was underrated was forgotten completely. And now there are a lot of jaw fans and those who are telling this is going to be the next big thing, it is only getting started. Like always, the new 100-200% bull run creates the new army of fans, and they disappear once this asset goes to the oblivion and gets significant retracement. Will the same is going to happen with jaw? I don't know, but I spotted some interesting setup here that I saw at some successful assets from the previous cycle that also started like this, with this sell-off, this redistribution. When they were released into trading, they got a huge sell-off, then they were forgotten, and when they were forgotten, some smart money, big money, were buying it, and we can see it on the jaw. We saw some indications that somebody was buying somewhere here and here, huge amounts of it. And definitely, why? Because this is how the market makers and smart money operate. Yeah, because everybody is focused on the popular and well capitalized assets, but these low capital assets, the new assets that nobody knows what to expect from them, it is easy to blow them off, make people get disappointed in them. As you can see how much it was dumping, more than 94%. And to be honest with you, right before a few months ago, I was crossing by this jaw coin, and I even decided to look at their platform to see whether there's some kind of activity there, and I didn't see anything that was worth the attention, the mention. And I thought maybe all these AVX products, all these AVX avalanche companies and projects, they are more useless than the Solana. Most of them have become unnoticeable and nobody uses them. So I thought the same thing about jaw, but look what we had here. And I found the similarity of this. Let's take a look at some other charts, and I will show you something interesting that I spot. So now let's look at this chart where I have all my drawings here. This is the distribution phase. So the asset has been released, it starts dumping heavily. The distribution here, and then it dumps further. Everybody doesn't get interested in it. Maybe some people were buying somewhere here, but then, as you can see, they smashed it even lower, so it would lose its kind of accumulation range, and maybe the real accumulation range is here, but the people who are buying all the way down and even here, they already get very annoyed and angry at these zones when it loses this support, and they think it has become a scam. And this is where the smart money can accumulate, actually, here and here, accumulate and do some things that are not noticeable to the crowd. And they made this is their very popular and the most favorite scenario, to make some new, fresh and unnoticeable project and its assets, to make it go down to the bottom, and they start accumulating unnoticeably, and then they start making the recovery, and then they accelerate it, building some kind of, like here, breaking this counter trend line, retesting it, holding it strongly, then starting pumping it, and then releasing some kind of great bullish news about some kind of, like, Trader Joe is going multi-chain, and a lot of attention has been dragged by the smart money and big money and other institutionals to it, and Avalanche is back on track, and other stuff, and already the retailers are running this rocket with you. And right now I drew this, why I drew this kind of setup with all these drawings, with this zones reaccumulation, this breakout zone and other stuff. I will show you, because there are some assets from the past that worked precisely according to this scenario, and they were very successful. Let's look at the synthetics. So let's look at what happened here. The same situation. The asset was released, distribution here, fake pump here, the distribution, and it goes into the lower range. A lot of people start buying somewhere here, it dumping lower. They think, okay, it is a bear market, I'm buying here and I'm smart. And they show some kind of live here and start dumping even lower, and everybody's getting nervous and angry because they think it is going to zero. And after that, we reclaim it, retest it, and go higher. So doesn't it look kind of similar to you as of what we see right now on jaw? And you can see this accumulation range, and you see we have a lot of space to go higher here, because the reaccumulation range kind of like this, but it doesn't matter. This reaccumulation range can be built in different areas, not exactly it doesn't have to be precisely at these levels. It can actually be done lower, not getting up even up to this one. Maybe we will get there sooner or later, we will get there, but maybe not straight away. Maybe we will start building this reaccumulation zone here, and that would make sense to me. Why? Because if we'll draw this trend line of the movement that we started, here is our global trend line that is going to drive us in the future, and it is around 30 cents, somewhere at 30 cents if we climb it a little bit higher. So basically, hypothetically, the price of jaw can actually get dumped, go lower, start some kind of recovery, and eventually get back to 30 cents. This is the zone that I would 100% would recommend people to buy. This is a safe zone. Even if it goes lower, if something goes wrong, it will be back sooner or later, or it will start its journey, and it is going to take off, break this higher range resistance, retest it as support, and we are going higher. Why I think it is possible? Because the attention to Trader Joe has been drawn back again. And if you will look at our synthetic situation, and I showed this chart to you in my Twitter account, and also, but you don't know what you could have seen here, that is going to go up to 86-90 cents, but you didn't see what is the actual power of this move, and where we potentially, I'm not telling this is going to be, it is not a financial advice, we are just discussing here, and this is all for entertainment. So basically, if we break through into this higher range, what can happen here? We can go up to 150, and let's analyze, if you bought the bottom, how much you would do here. 3000%, 30x on this asset if you bought here. If you would buy somewhere here when everybody already follows this asset because it has become hypey, only for 400% here, and this is what we are talking here. 3000% on jaw. For example, you bought somewhere here, it is more than $5 possible, theoretically possible, and based on the total supply of jaw, which is somewhere 500 million tokens, totally possible. It has no limits with this supply actually. It is only to imagination and how much the big guys are going to accelerate it, how high. And if we talk about synthetics, but we should mention that synthetics has a little less tokens, 300 plus million tokens. So this was not the top here at 150 from the low and this reaccumulation range. Look how high it went after that. $7 and $28. How much it went from the previous cycle when he started in 2018. And if this kind of setup is planned by the smart and big money for the future, for the next bull run, look how much it can go up. But I would wouldn't think about these precise numbers. I would divide them in half. So basically, what can happen theoretically with this asset, and we are not telling this is going to happen, but if you ask me whether it's worth buying this asset, jaw, and holding for a long term, I would say yes if you bought somewhere in 30-40 cents zone or lower. Definitely it is worth holding for a long term. I think it is going to show something interesting here because the setup is very similar and looking alike. And why I think this is also possible and why we should not focus on this, on the synthetics reaccumulation zone, and focus on another one. Let's look at the seller, the Binance related asset, and it has the similar situation here. The release of the token, sell-off, not very precise like there on synthetics and jaw, but the same redistribution here. People are buying, but it goes lower, and everybody thinks, okay, this is the accumulation zone. This is the accumulation zone. I'm going to buy here, and it goes lower. It scares and aggravates people, and everybody thinks it is over for it, but it starts some kind of vertical diagonal recovery, and then reclaims that range and starts forming a bullish formation. And after that, it starts drawing some kind of 500% run here. And what is happening right here, after that, if you bought this bottom, this is the first run, 500%. And let's remove these drawings and add some new ones. And what has happened after we, for example, we bought this bottom? What would happen if we held it 7,000%? And it is not the top, the third wave. So basically this move that we are having on Trader Joe right now, theoretically, if they are interested in promoting this asset and this platform, the big money and big guys and the creators of that platform. So basically this move to 50 to 60 cents, maybe 80 cents is only the first wave. And the next one is going to be the second one and the third wave. And if you want to nail the trading of this asset, about longing and shorting or buying its spot and selling in the right place, you can use seller and synthetics charts. They will show you when to sell, macro sell and macro buy, resell and rebuy. You will be invincible in general about it. And this is why I think seller is going to be more precise for the Trader Joe situation, because this is the trend line we have, and this is how low after that. If we look at the synthetics, after making that first wave run, it held it quite nicely above here, and then precisely after that it went higher and reclaimed that higher range and went and took off. But here we can see the example on seller network. After that pump, it drew some double top here, double top, and went lower precisely and right into the accumulation range. And this is our trend line that formed this move. And this is where precisely upon this trend line it found its support and started to reverse and taking off significantly. So basically I think the same can happen with the Trader Joe. How much we did here? Almost 400%. And it would make sense to me if this trend line we are building it on this, and this would make sense to me if the price would start drawing something like the double top here. It is not guaranteed, of course, guys, but I told you 50, 49 cents, 43, 45. I think we are going to reach these numbers, but whether we are going to go higher immediately or we are going to retest this trend line, and I would buy somewhere here, and this is going to be a great support and going higher. I think this is the synthetics setup scenario, and this is the seller network setup scenario. I think for jaw, the seller network setup scenario is more convenient, and I think it is going to happen because a lot of people have been drawn into this run and they are going nuts already, and we need to squeeze them and make them lose their faith before we send further. It is not that easy like it was with the synthetics. There weren't that hype at that time in 2018. Nobody knew what is going to happen. Everybody thought that Bitcoin is going to zero, so nobody focused on these assets like synthetics at the moment. But here with jaw, this would be a great speculation and shaking off a lot of people before sending it higher. And you will ask me, okay, this is great opportunity here, great example. Can we find the similar assets with the similar setup, the pattern? And I will tell you, yes. If you looked my previous market review with Bitcoin and a bunch of alts, I was talking about the DOT related assets before, and you will see that they are so similar to this jaw chart, and the synthetics, of course, and this Joe looking chart. If we look at, I told you before, I was talking about glimmer. It also, this kind of candle doesn't look very, it spoils the view. Okay, this was the that range support. We have these drawings here. Okay, so basically right now we can see, so it goes lower and lower here and accumulation is happening, but we can see that nobody's talking about glimmer right now. Everybody got angry about it after they got miserable airdrops after the parachains. They logged their polka dots, the dots dumped heavily too, and everybody has forgot about glimmer, but they are doing their stuff out there. The voting is happening, something is brewing, and at some point I think if it retests here, at least comes to this, how much is that, 30 cents, it is worth buying. 28 cents, good, it is worth buying in my opinion, because when the time comes, it is going to pump and pump heavily with some kind of news, the same as with Trader Joe or something like this, and how much we can do. And as you can see, when the real pump and ascending formation is going to form, the pump is going to be heavy. So for example, if we buy from 30 cents, how much we can do here, and we will break right into this 300, at least 300-400% jump is going to happen here, and then some kind of reversal, retracement, then again recovery. It is possible for me in the glimmer. So a lot of people talk about, of course, another one top asset is Acala, but it is related to stable coins, and I do not think there might be problems because of the government regulation and their CBDC and their attack on all the stable coins. And if you look at Acala, I don't know what is going to happen here, but it looks kind of similar. But what you can see here, we kind of see some kind of attempts to buy it or whatever, or it is only manipulative to fool the people so they would think that somebody is buying while we are going lower. What is different with this kind of Acala's chart, it kind of looks similar, but each time it doesn't stop going lower. For example, like others, and it is not buying back significantly. It fell under this local range and it cannot reclaim it for a long time. It goes lower, lower, and lower and lower. So I don't know. It doesn't look heavy for me. So maybe I'm wrong here and it is going to pop heavily, heavier than the others. For example, if it pumps, it goes to this 32 cents area, and from now it is 200 plus percent. It can happen, but it doesn't look kind of very healthy to me, this asset. The liquidity is low, it is clear from here, and it goes lower and lower. We don't see buybacks like, for example, on Glimmer. We can see that we got stopped and we are trading with this range kind of accumulation. We went lower from the higher range here local, and we going even we are holding within it, but Acala is going lower and lower, and we don't know whether it is healthy or not. So I wouldn't like to invest in something like this. If we invest in this kind of risky assets, some kind of not more than 10% of your equity, of your deposit or capital, be respect and adhere to your risk management. So we need to see some the livelihood of these assets. So it has the healthy price action. For example, Karura, the polka dots, the Acala's sister, it doesn't look healthy too. But if it starts pumping, and I am sure that at some point it is going to start pumping, but I am not going to invest in it or buy it because it is too risky. It is going to pump, and its pump is going to be very juicy up to this level, 600, 500% easy. It is going to be when any kind of news related or update related manipulation is going to happen. It is going to pump heavier than the others, but the risks here, I don't see simply fundamental reasons to buy it. It is, even if Akala is not that healthy, it doesn't look healthy, Karura even more, and we talked about a star before. So what I'm suggesting you to look into, I'm not suggesting, not recommending, I'm showing you this only as an example of similar setup we already played out partially on Trader Joe. And if you wish that I would like to be here on the upon the lows of this potential rocket, and it is too high for me to buy already, I would draw your attention to something also forgotten: DODO exchange. Why? If we skip this previous volatility here, we see here again release of the token, distribution, finding support, forming again redistribution area. A lot of people bought here, thinking it is going parabolic here. Then we lost it and started dumping. People also drew this support here and started buying, and it goes even lower. But after that we can see the price is getting hold. Somebody's holding it, the market makers. And if we look at it more precisely, you can see, sorry guys, you can see that this local bottom on the daily kind of drawing some kind of the double bottom here. So I wouldn't be surprised that this price comes to 14 cents or 10 cents, from 10 to 14 cents, and forms some kind of local bottom here. As you can see here, it is, fake pump, back down, and we are drawing another S here, another bottom, and we are taking off. This is what I'm interested in right now, because it can be something that we can take. And why it is worth, I don't know whether it is trash already or this, but I see live in this asset. It is trading actively. We see something holding the price, and it doesn't renew its lows, and how far it can go if it goes higher. For example, we continue. For example, let's not take the total bottom, 14 cents we buy here, and we start the recovery. First sorry, let's take this 14 cents somewhere here. We start the recovery, 242%. If we go up to this, 400%, and this is the reaccumulation zone and reversal, and we are going higher, and we can build this trend line here after this precise direction here, trend line. For example, what we can see here, the price starts pumping, going like this, some maybe like that, recover again back under, and then starting to recover, take off, and we are back in the game. So why I am paying your attention to this? Okay, DODO, let's look at it, what it represents. DODO, decentralized exchange, also DeFi project. It was good things. It was audited by Certic. It is a good indicator. Total supply 1000 tokens, and this is a very low price with this asset, and it can actually potentially run up to a few dollars, up to $5-10 easily. The market cap is low at the moment, so it can be easily manipulated, and cent higher. So basically we can see highs. Oh, okay, $5-6 highs. The potential here is very high. It is listed on Binance. Why? Because let's look at this exchange, this DAX, and it is also multi-chain like it is also multi-chain like it is with right now this news that have driven the Joe's price, all-time volume, and decentralized trading protocol for Web3. And what is good about it, it has the fiat on ramps, so you can easily buy with your money and other stuff. The crypto also, it has a lot of liquidity mining, liquidity pools. The same DeFi it is not only trading, it is the full DeFi suite for trading, crowd pooling and other stuff, custom tokens, other stuff. Who are the investors? So basically, look at these investors. Framework, Pantera is huge, Binance Lab, Coinbase Ventures, Defiance Capital, Galaxy Digital. Oh my gosh, and it went so much low. And what we know about Binance low, and it was a project from the Binance launch pool. So Binance loves to, when everybody already forgets about the tokens like Seller Network, like BTT, BitTorrent, and others, Binance likes to when they release some kind of project on their platform, and a year or two passes and everybody forgets about these assets, they like to revive them and drag their price higher when nobody expects. So basically, and Pantera too, if you don't know, half a year ago when I was talking about let's buy Injective, why? Because Binance Labs and Pantera are behind it. And what did they do? What are they doing to Injective? Check out their charts and how strong it is running and how much they invested in this asset. I'm not saying that the same thing is going to happen with DODO exchange, but definitely these guys are huge, and it is very easy for them in the convenient time to spike the price of DODO. So basically, even if you buy and it goes lower, don't worry, at some point they will wake up and run the price back on higher. So definitely, in my opinion, I think it is worth paying attention to DODO. Actually, it is listed on high profile exchanges, a lot of huge investors behind it, and they will continue to grow, in my opinion. So it is worth paying attention to it too. So, and at the moment looks legit. So it is not the recommendation for you guys, but it is just an example for you to understand what low liquidity, low cap assets can, at least if not in the long term, at least locally, provide you with huge return in a 1 month range. So basically it can trade for a long time in some lost and underrated range, but then it gets within a month 200, 300, 400% up, and you made your profit, and you can sell it and rebuy lower. If not, if just invested in something more valuable to you. These are my ideas. These are just fantasies. Don't take it very seriously, but I definitely would like to try some of these scenarios, maybe on Glimmer or DODO. I have this desire, but I also have the spare capital to place on it, and I can risk it, and I can allow myself to lose it. It may be not the same with you, so be very careful with investing and trading. Good luck to you guys.